Welcome everyone to today's session on artificial intelligence, looking at real-life examples of applications in commodities. And we've got a great panel here with a lot of practical experience in this area. There are some pretty amazing projects in the commodity sector making use of AI, looking at, of course, from a trading perspective to tracking vessels, predicting price movements, weather, everything you can imagine there, analyzing the vast amount of data. And this session will be looking to highlight some of these great projects to inspire you and your team of data scientists. So without any delay, let us introduce the panel we have today here, starting off with Kim Benny, Global Head of Risk and Trading Technologies for Albion. Kim, hi, do you want to say a few words?
Hi, everyone, thanks. So yes, I'm leading this function for Albion. So Albion was created as a spin-off from Cargill and Copper Sugar. We're trading physical sugar. And one of the main aspects of what we're trying to achieve with AI is about price prediction, is about trading performance, trading strategies. So as head of trading technologies, I went in my career full circle. I started as a statistician in utilities, then into commodities, soft commodities, hard commodities, and now going back to data science. Full circle.
That's great. Thank you, Kim. Emily, would you like to introduce yourself?
Sure. Thanks for having me. I'm Emily Watt. I head up innovation for BP's trading and shipping business. So we're the commercially led innovation team dedicated to trading and shipping. And we address pain points and opportunities that require new capabilities. So they may come from new digital solutions, new ventures, and new ways of working. Some of that is done in-house, a lot through external partnerships with startups, which I'll get into later. But my remit covers all products and regions across trading and shipping. So it's great because I get to work with oil and gas, with LNG, as well as low carbon trading and the power business across front, middle, and back office. And a lot of our projects actually involve AI, which we view as a really key enabler for improving the way we make decisions. As we all know, commodity trading is so physical. So we want to automate any parts of it that we can so that we can generate more margin, save costs, and create efficiencies.
Absolutely. Absolutely. Thank you very much. And Ron.
Thanks, Tom. So Ron Crean. So I'm VP Commercial at Windward. We're an AI company and we specialize in all things maritime. So the red thread of everything we do is about the sea. We've been using AI for about 11 years. Most of that time has been around governments, intelligence agencies, navies, military, and then taking what we've learned there into commercial in the last 4 or 5 years. My role is around energy. So I look after our energy business and our supply chain business. I trained as a shipbroker, so I've been in shipping for about 27 years, but most of the last 17 of that has been in technology businesses still connected to the sea, which is my passion. So great to be here.
That's great. Thank you very much indeed. And Joseph, hi.
Hi, Tom. Hi, all. Joseph Collins, a managing consultant with Capspire. We are leading global consultancy focusing purely on commodity trading and technology. I've been working in risk and trading with close to 20 years now, 10 years plus in commodities and power and renewables in particular. And one of the areas I specialize in is electricity price forecasting using machine learning and AI techniques.
That's great. Well, we've got a very interesting cross panel. My name's Tom James. I'm helping to moderate from TradeFlow Capital. Been in the commodity trading side and for 30 years. Used to have hair, so definitely could have done with a bit of artificial intelligence a few years back. With 2008 volatility. To be a bit of predictive analytics. So I'm very keen as well to hear what the panel has to say today about all these topics. So yeah, without further ado, let's look at this. I mean, in terms of the real life applications, and in fact, before we start there, just to say to everyone who's attending, we've got an amazing number of attendees here today. Put your questions into the Q&A box there. And we'll answer this as we go along. So I've got the system up here so I can keep tabs of any questions coming in. What are the business problems that we need to answer? And let's kick off with you, Kim.
So in terms of business problems, if I'm starting with a narrow scope, and most definitely I may not be at liberty to disclose too many trade secrets, but just going into the main area is about price forecast, price predictions. So for obvious reasons, we need to have a bit of an edge in terms of trading strategies, which is having an opinion on where the price of various commodities, commodity spreads, commodity volatilities, commodity amount of liquidity available on the market, because we're one of the largest players in that space. So how many lots, how many dollars worth of sugar we can buy or sell is also an important thing to have an opinion and a forecast on, is to be built for the next 5 minutes, the next hour, the next day or week, to establish. It doesn't have to be perfect, obviously, but what is really important, that's what is generally called alpha, which is excess of performance that you can get, provided you apply good risk management and money management techniques. So for that, we look at various things, and typically we'll try to look at pockets of data where few people have been looking, or we try to combine pockets of data where people have already been looking in isolation, and we try to combine them. Because in the end, sometimes the alpha, the extra value of a particular set of information, that's why I'm not talking about artificial intelligence, I'm going to talk about data, because in the end, it's all about distillation of data into insights. So you have to start with the proper amount of data in the first place. So either you get some data which is proprietary, yours, or people are not looking at this one in particular, or it's quite expensive to get, so few people get that, or you get a lot of relatively ordinary data sets, but you have a funny, interesting, unique way to combine them together into generating insights, because they've probably been looked at. I mean, historical time series of price, everybody get that. But how do you mine that to generate alpha as well?
All right, yeah. So,
complement, and then for details, we can discuss it maybe later.
Okay, yeah. Emily, I mean, where have you noticed, at least BP or otherwise, where the AI can really help us with real life applications?
Sure. Yeah, I think to the original question around business problems, I agree with a lot of what Ken said. It's really about what's going to give us an edge, cut out inefficient processes, help us access new markets and customers, and impact our bottom line. And in that vein, speed is huge, and distilling specific and relevant insights from large amounts of data is a really important piece in terms of building those predictions. If we move on to sort of what are the areas where AI can really help, let's think about this in two buckets. So tactical versus strategic. In both cases, we're going to use AI to quantify value. If we need the insights for immediate tactical decision-making, for example, through an alert where the timeliness of information has a direct impact on trading value. Sometimes in that case, a single data point is going to be more valuable than a wider data set. And we stay in this sort of tactical bucket for a minute. Let's talk about machine learning, because machine learning is detecting patterns, which are improving our decision making. And two specific examples of how these patterns work. So take anomaly detection, where you can use machine learning algorithms to spot patterns in historical data to detect errors in more mid and back office functions like data entry that are sometimes missed by human checks. And this often leads to cost savings and efficiencies. Pattern example number two, especially for trading. So our machine learning models are trained on historical data sets to help create predictions for future trading scenarios. They also highlight deviations or anomalies, which can be an indicator for a specific trading opportunity. For example, spotting an anomaly like a change in the activity of a particular vessel, or a change in the number of vessels or volume. And this can be a trading opportunity. If we move to the strategic decision-making bucket, let's talk about satellite imagery for just a minute. So we can use AI on satellite imagery for asset development. We rely on AI to enable enhanced image analysis and identify key components like, are units built? How about maintenance outages, timing of maintenance outages, timing of completion for a new asset, or seeing vessels when they are not using their transponders. And the value for this information for one asset might be low, but across a large set of assets, it's highly strategic. And last on this point, I would say satellite imagery for carbon projects is a very hot topic. It covers many, many different sources of data, and there's a lot of activity in the space. I'm not going to get into detail, but that's definitely one to watch. I'll hand back to Kim, and you can come back to me after if we've got some time. I've got another example.
So maybe a quick one if we are very practical about business problem. Let's just say that what you want to do is to have an opinion on all your competitors' processing plants, if they are operating or not. There are different ways to do that. You can, pay people to sit in front of the fence and, check how many trucks are going in and out, or, if there is any movement out there. Now, there is probably another way if we're looking at satellite imagery, which is indeed a very, very underexplored, probably, a data set on maybe not so creative ways. For example, some satellites will give you the access to temperatures estimates. They may have revisit time, which are, soon enough, once a week, twice a week, time of revisit time over any point over the planets or any meaningful area of interest for you. And from there, you can derive if a particular plant or a particular asset you're interested in is hot, is warming up, is cooling down, or is doing anything funny. And from that information, because plants don't move, so it's kind of easy to track them over time. And by doing this over a large set of plants, which normally is pretty noticeable and easy to recognize on satellite imageries, because they are hot lumps of metals and there is very little shielding on the top usually, because the chimneys and other things, you can derive before anybody would know, or relatively easily maintain a data set of which assets of your competition is operating and which isn't. And that's relatively easy. All the data you need for that is free, and all the algorithm you can use for that is also free. So that would be, I think, one business problem you can solve using satellite imagery and a little bit of image analysis.
Yeah, I'll definitely pick up on that point on a later area when we sort of, what are our internal needs in order to be able to actually do something, around AI. Ron, I mean, do you have something to add in terms of the sort of the real life applications that you've come across, the problems that this can help us with?
Yeah, absolutely. I think it's about context, building better context faster. So, all the examples from the last couple of minutes are really around, which bucket are we in? Are we in sort of, descriptive, what should I know? Predictive, what's about to happen, or prescriptive, what should I do about it? I think that's one of the really big areas where we play. So we focus on different areas particularly. So if we were looking at, say, for example, Emily's example earlier about the vessels, what we're trying to look at is, I sort of think about it as the sort of ground truth data. So everybody accepts it as, accurate because it's based on GPS, let's say. So if you're looking at AIS data, on the face of it, the ground truth data that we all now rely on like electricity, right? It's been out for 17 years. We've had lots of time to play with it. It's not new. What is new, I think, is the fact that the ground truth is shifting. People are getting better. The people who want to, let's say if we're talking about sanctions compliance, for example, in tanker chartering, they're getting better at figuring out ways to outsmart the system. So you've got to constantly stay ahead of that. So from our point of view, we're looking at, if you just narrowed it down to tankers, let's say, there's whatever it is, 32,000 tankers. What are they doing every day? And is it different to what they did yesterday? So we're really looking at things like, pattern analysis. What does a normal economic voyage look like? How does that change over time? And then I think what becomes interesting, particularly in commodity trading, which I've looked at for, 15, 17 years, something like that, is where do you find, how can you go beyond something that looks like a cost when you think about how do I mitigate my risk with things like compliance, but how do I actually find new emerging patterns that I can make money on in a different team. So we're taking the same data, but we're building new behavioral algorithms for different teams. And I think that's an area where there's some new, I say new, it's literally in the last 2 years, the whole thing has almost reinvented itself again, just because better technology is available, better processing is available. and the costs come down over time to enable us to do much more complex things.
That's definitely something we're going to discuss it in a little while. Joseph, thank you for waiting patiently. But the idea is that, you know, we've heard from some business people who are in there doing stuff. I mean, you must see an even broader view as a managing consultant around the AI space.
Yeah, there are two examples that come to mind, Tom. One of them has been worked on by my colleagues in the States, and they've come up with a software solution, Gravitate. It's based on their interaction with clients. So I'll talk about that for a minute, and then I'll talk about my own direct experience. So one problem they've seen a lot of is the refined fuel markets, and there's a lot of decision making needed there around supply and logistics. So they've come up with a suite of AI tools, a pipeline, if you wish, which helps businesses make the best and most consistent decisions. And they're finding that it can save margins of anywhere between 0.5 to 3 cents per gallon. And really, if I talk just for a few more seconds about it, it's not too complicated in that the first component is a time series forecasting. How much demand for that fuel at the customer site is likely to be needed, and that's where the machine learning comes in. And then the second component is, well, you need to be able to ship the fuel from the various locations and get the right product to the right locations. And that's where linear operations or mixed integer linear programs comes in. Yeah, so they've a lot of experience with that and have had a lot of success to date. The area where I would have more direct experience is more around using these methods for predicting prices. So if you think about electricity markets, there's a lot more renewable generation, there's a lot more people in the markets, a lot more traders, and a lot more arbitrage opportunities. So electricity prices are very volatile. So what are the latest techniques for forecasting these prices? What are some of the weaknesses or strengths of these methods? And you know, it comes back to one of the points that Kim made earlier on, and I really liked it actually, is that a lot of this is about the different data sources that you can get your hands on. So there is price historic data, for example, and everyone looks at that. But are there other buckets or other silos of information that are out there and that are influencing the price movement? And the final thing I would say is that we talk a lot about methods, and we use jargon sometimes in the industry. They're not really that complicated a lot of the time, I would say. And we need to use actual intelligence as well as artificial intelligence, asking the right question with the business.
Oh, that's great. We've actually got a couple of questions here. Well, they're both similar in terms of from a commodity trading perspective. Can we have an example of how AI might be used for price arbitrage or in terms of price prediction in case of commodities? Kim, Emily, comfortable to give some thoughts?
I can take that a bit. I can take it a bit indirectly. I'm going to talk about shift to low carbon for a second, because we're trialing, and I think this comes into it, we're trialing some NLP solutions that provide faster enhanced customer insights as well as news alerts. And the faster you get this type of information, the closer you are that you're going to be able to get predictions on pricing. So with such a huge shift towards net zero carbon future for many of us, there's a plethora of public data to wade through around regulatory and legislative changes and requirements. But we also must consider how company ambitions and appetites are achieving this. So the focus moves not from, it moves from how much carbon to how much and when, as some companies choose to get ahead of the game before regulations mandate behavior. And we view both semantic and sentiment analysis to NLP techniques as key in uncovering these subtleties from public statements on carbon intention. So the earlier you can get that information, you could argue that that's going to give you an ARB advantage. But the goal of this is twofold. So one is to be able to present targeted products to our customers as soon as, or potentially ahead of when they want or think they want them, but also to monitor our own energy transition, helping us manage our exposure and think ahead about any impact on our products. So allowing us really to embark on this energy transition together with this faster information. I hope that answers it.
Yeah, Kim, anything to add on that?
maybe look more at the price forecasting angle. I would say, well, if your goal is to predict where the price of a particular commodity or its volatility or spreads are going to be in, like, let's say an hour from now, if that's what the business problem you've been tasked to solve is, definitely you'd better look at historical prices of that particular commodity, of all the realm of all the related or even not so related commodities. That's is going to be very useful. You need probably 20 to 50 times the time resolution of your horizon. So if you're looking at predicting prices in 1 hour, better look at minute level time granularity. I would say that would be a bare minimum, I take. And beyond that, definitely, if you have access to that, you should be looking at the order books and all the orders for buying, selling, intentions of people, because actually it's exactly like being in a room where, you know, a cocktail party, lots of people are talking, but our brain is able to focus just on the discussion we're having, or we listen to one stream. Okay, if you can build models that do exactly that, because an order book is like a lot of conversation happening at the same time. So you need to develop models which may use language processing, NLP, very interesting because it's a language, okay? Order management system are like speaking in a language, so you get to recognize where the orders are coming from. Is it this particular piece of software? Is it that market participant? Is it a robot? Is it a human which is putting the order in? And you can distill that into a sentiment with maybe a submodel, and that submodel may give a sentiment. Okay, the humans are getting bulled up on that particular commodity, or the machines are getting bulled up, which is totally different crowd. But you need to be able to distinguish who's talking and who's acting. So is it a robot, small size orders, lots of them, lots of changes, typical patterns, or are there human traders entering those orders? So this is something you definitely can build a model to achieve that. And then you can also look at the dimensionality reduction capabilities, various approach, transformers. We can get more technical if somebody has a question or ask questions later, which really would be focusing on the, let's say, price tape and order book tape to distill that into a sentiment as well. And then your final stage might be a model of models, which is going to be combining order book sentiment, news flow sentiment, price sentiment, technical sentiment, this and that, into some kind of directional cue where the price is supposed to be in 1 hour from now, higher, lower, because in the end, it's a simple answer you're looking for. So the whole exercise is you start for probably a few hundreds of thousands to a few millions of dimensions,
Yes,
down to one, which is going long, going short, higher or lower, or no moves.
okay, that's great. Thank you, Kim. Ron, we've got a question here about AI around determining the vulnerability of assets, power grids, telecoms to extreme weather events and climate change. As climate change engenders more extreme weather exposed assets such as pylon, masts, substations are all linked to energy and stuff. And maybe Joseph as well, you've seen something around this area as well.
Yeah, I mean, if I comment on just a couple of aspects of it, I think what we've looked at lately are things like how do you basically harden your approach to things like when you think about, if I use one asset class, if you think about ships as an expensive asset class that, you know, most of us are exposed to, that's the area that I've looked at specifically rather than power grid. So that's the area that I can comment on. So when we look at that, I listened to a brilliant webinar a few weeks ago. Julian Clark from INS was describing how companies can or should harden against things like cybersecurity risk, which is becoming a massive area. You know, I think it's 600 to 900% increase over the last couple of years. It's amazing. Which
exactly, we just had that pipeline, of course, hacked in the US, so it's big news. Exactly.
So I think when you look at ships as part of a supply chain, and then you think, you know, where's the weakness? He's a great example of, you know, it's all very well having a fantastic cybersecurity policy for your house, but if you don't have it for the garage next, he used the analogy of the garage next door with a weak door, you know, where you basically have some backdoor way in, and for a lot of companies, it's the vessel, right? So he used a sort of a white hat hacker who managed to get into a system in 9 minutes and then get into the bridge system of a vessel not long after that. So I think for us, it's about being open to the idea that things are changing pretty rapidly. And just one very brief example of that is when you think about, I touched on it earlier about ground truth, things that we trust. And trust is the key element here, right? When you're talking about data and inputs. When you think about ground trust, things like GNSS, so the Global Navigation System, previously this was an issue for military. And in the last few weeks, we've seen, actually one of our articles got syndicated about 140 times around the world. It was in the Washington Post the other day, because we discovered, one of my colleagues, Draw, had discovered this issue. And it kind of comes to the point of, when you think about AI and how to harden your business against these types of threats, vulnerability of assets, is having not just a human in the loop, but the right human in the loop, because these things are incredibly difficult and complex to get to the bottom of. So if you've got somebody who's deeply trained and knows what to look for, I think what's great about AI, probably to Joseph's point from earlier, is I think the key is having the right frame on the problem you're trying to solve, and then having the right human in the loop in order to be able to augment rather than entirely rely on AI. So I think it's the augmented intelligence approach that works really well in these kind of complex situations where it's constantly moving.
I know we're jumping around a little bit, but I think this actually conveniently leads also into governance and controls around AI, because obviously, we've got the threat of hacking, both assets, but also now we're getting AI systems to try to also monitor assets and optimize those assets, to make better carbon decisions or better profitable decisions, or a mix of both, etc. Joseph, do you have anything sort of on that side of things?
Yeah, I guess the one thought that I have around here, and it's more about the application generally, and it's just something that as a data scientist I'm aware, but we all need to be aware of it, is that it's very possible with these techniques to overtrain to the data, the whole concept of the signal and the noise. So we just, as practitioners, we always need to be aware that you can fit a complicated model and get fantastic results on your training set, but how well does it generalize? And that's where, as Ron said, making sure that you're liaising with the business, because they'll have that, well, how good is that in practice? That's a key thing there. And I guess, if we're talking about the wider, the industry, and we need to make sure that we don't overcomplicate it, because these methods aren't necessarily complicated, but we also need to make sure that we don't over-egg it. As in, these developments, they are real. There are real use cases as evidenced by Emily and Kim and Ron. And the applications are good enough, they stand on their own, I would say. And we don't necessarily do the industry any favors by over-egging it.
Okay, I mean, coming back to you, Emily, in terms of, the AI, we've heard a lot of the great opportunities that it presents, but also if we don't have the right in-house expertise or the right sort of partnerships have been established, we potentially could suddenly open the door to a lot of other issues, right?
Yeah, I have a lot of thoughts on this. I mean, look, I think in terms of the model in-house and external, there's innovation and adoption of these AI and other technologies can be done in so many different ways. But for me, you need people in-house who can understand how to find the business problems and the opportunities first. And then you need both the technical experts, including the data scientists, plus the creative innovators to work through these problems, figure out what is the right approach to tackle them. Do you in-house build? Do you form a partnership? Do you take a minority or majority investment? You also need people who understand the emerging tech and startup ecosystem and know how to work with smaller companies who are trying to work with bigger companies, if you work in a bigger company like I do. You need to foster the right culture to support the adoption of these new technologies, allow a space in your organization for people to have time to innovate, to ask questions without knowing the answers, to experiment. And so for us, when we were building our innovation team, when we first started, we relied heavily on external expertise to see what kind of model worked for BP trading and shipping. Now, fast forward, our team is composed of technical experts, energy enthusiasts, and really relationship managers who search for opportunities that we can solve through cutting edge digital solutions, both for impacts now and in the future. And, speed is a big part of this. So we've got to make sure that we weigh up how fast we can deliver, get a piece of tech live, how much it costs, who has the best capabilities to provide it, et cetera, et cetera. And I mean, a quick note on, the way we work with startups, we run a portfolio approach. We rapidly test startup solutions against pain points and needs for new capabilities in the business. We scale the ones that work. We refer some elsewhere. We don't scale the ones that don't have positive or, reliable KPIs. And we sometimes look at solutions in non-obvious places, like in other sectors. Key thing for us is that we're really demand-led, going back to that business problem. I think that's so critical. So you can bring in the technical expertise, you have to, and you have to have your partnerships, of course, internally, but you have to be able to know really from the business, what are the prioritized needs? And then for us, we have built in the capability to then perform what we call radar. So we know how to source and evaluate new technologies in new and established markets to see what we can, best in class that we can bring in.
Right. And then Kim, maybe you want to add something there as well, and also sort of maybe mention a little bit, you've alluded to the fact that things are getting a bit easier. There's a lot of ML code, other things that may be out there within easy reach for even small organizations to use as well.
So the complexity of developing AI projects is at a point, especially because I'm part of a smaller structure, is you have to decide with whom to partner up in certain key areas. Because at a point you may be looking into radar imagery from satellite, and honestly, interferometry is hard science. So you'd better get the right people in the team to.
Yeah, in fact, we have a question on: is there a security issue in the use of satellite photography? I'm not quite sure where there would be a security issue. I know you use satellite data sometimes in some of the things you've been looking at before.
So my perspective on this is you can work with a lot of very interesting startups with a lot of very interesting projects. Then you have to think long and hard who owns the intellectual property, because there can be big money into this, into the outcome of those particular models. And you may be better off building some of those by yourself, or and I would definitely advocate to keep the key core abilities, because you need to bridge a gap between what the business wants, what are the business problems, where's the data, can you get that data, at what cost, and what kind of machine learning or AI process you're going to put in between. So we've taken a slightly odd approach of especially working with, let's say, non-commercial entities. So we work with research people. So being based in Geneva, Switzerland, we work with CERN because they're quite good at IT, and they are, basically they invented the internet some 35 years ago or so. And there's plenty of very interesting people, and they're absolutely not competing. They're not for profit. They're going to not sell to anybody else. They're just really interested in what we do. And we are very, very interested in what they do with satellite imagery. So that can be a kind of profitable type of arrangements that you can get. You can also work with startups. You can work with selected, but definitely the intellectual property would be the key in those. Now, vis-a-vis to the satellite imagery, yes, there are consequences. Typically, European Space Agency's data is a very flexible license, so you can reuse that data. I'm talking all the Sentinel 1, 2, and 5, and some other Sentinels which being launched. So that data has a quite flexible license, but if you're looking at Landsat, so US satellites, the data usage license might be a little bit trickier, let's say. So you'd better pay attention, because some of that information you may not be able to resell, use into models, share with partners. So it's like any software. The closer it gets to open source, the cheaper, but usually there are some license attached to that. So you just have to be mindful of under which licensing regime is the data you're processing, and under which licensing regime is the piece of software that you are using.
That's great, thank you. So obviously we hear all the stories, Ron, about AI, and we've all seen the movies Terminator. How do we make sure that we've got the proper governance and controls there, such that we don't wake up and find that the AI has gone AWOL and caused us issues. So
I think there's a few things. I think it's about governance of data, security of data supply. Over-reliance on things you don't control is a problem. So mitigating those risks is key. So I think things like having a very clear, crystal clear data structure so that you're able to explain it. If you've got, for example, the way we approach things is we overdo things. So we have, multiple sources for the same thing. We, process it, throw away quite a lot of it. But the idea is that it's about thinking, how do you do that heavy lifting? And if you drop any of those data sources, how do you ensure that your heavy lifting continues without missing a beat? And also it gives you some flexibility about being able to swap out data sources over time. And that, we've learned that over the last few years, that's really worked out very well. And then I think it's having a sort of a labs approach, where whatever we're doing for, our day-to-day business, which changes all the time in terms of keeping up with new technology, we've got a labs approach as well, where, in the background, we're constantly trying to, test new systems, test new ways of thinking about the same problem that we've done before. And the idea is to constantly push, what's possible with the technology available. So things like, NLP or machine learning, deep learning. I'll give you one example. We switched it on last year for one thing that we were doing, which was incredibly complex, about ship-to-ship transfer. And the day we switched on the deep learning model, we found 400 extra ships that were displaying the behavior that the model was designed to do. So even when we think we're already doing a good job, the idea is to constantly try and reinvent it. And I think if you've got the right governance in place and you can explain what you're doing to, you're co-creating it with customers, I think it's a nice model, because it is not happening in isolation. It's more this kind of glass box versus black box explainability, and that's where the human in the loop example I gave earlier comes into play.
Great. Actually, do you mind explaining a little bit about the difference between machine learning and deep learning? So, we've got machine learning, which I understand is sort of almost very, very good, but a specific task, quite narrow, as it's sort of termed. And then the deep learning, which is just starting to really come into play, is really broadening out, sort of self-learning in a way, isn't it?
If I start, and Joseph, I know is deeper into this than I am, but essentially we've built neural networks to solve specific problems. And when we look at deep learning, what we're doing is essentially connected neural networks that get deeper and deeper and become self-learning. So the outcome is slightly different, because it actually means that in one model, you've got inputs, which we're constantly adding to build better context, and outputs that you would expect. The difference with deep learning is that the system is actually generating whole new data sets that we didn't realize at the start of the project that that's the outcome we were going to get to. And that's the exciting part about this as a field, is that the system is actually generating new things to think about, which we didn't even realize were a thing, which is why we were able to solve things like this GNSS problem, where the ship appeared to be in one place, but was actually 50 miles away.
Right. Okay. Not good. Yeah. Joseph, do you want to add to that? And also maybe talk a little bit about integration with existing systems as well? Because if you're building these massive deep learning networks, how do they interrelate with things? We actually have here a question, dare I ask, to Emily also about compliance departments as well in big organizations, how you convince them to let you unleash the AI as well. But so Joseph.
So it's naturally follows on from a point that Ron made earlier on, actually, and it's along the same lines. Ron mentioned the concept of labs, and I really like that concept, actually. So what projects have I seen work well? It's been projects where the business are the main sponsor, but it's not just the business. You've got input from a number of different teams. And it's great if you have got that multidisciplinary team sitting together working on the problem. And typically, they'll work on a proof of concept project first, whereas there's a very narrow or well-defined scope, and they'll work on that. And we need to be aware or acknowledge that a lot of the time it's an iterative process. The answer just doesn't jump off the page a lot of the time, and it takes rework and analysis over time, the way Ron described. If that proof of concept project is then working well, then you're at the stage, okay, you're producing actionable output, it looks good, we can think about productionizing it. But the good with the framework that you've set up, you've actually got some of the key stakeholders involved. You've got your IT team, your trading team, they're already involved in this. So the step of moving it from a proof of a concept to a production and operating thing is much simpler because you've got everyone working in concert. So you've got a great process. And I really liked Ron's description of the deep neural network earlier on, and that was fabulous. As in, it is, as you were saying, Ron, it's a series of models layered on top of each other, and it kind of links to the point I have earlier on. Just the one thing, there's great uses with these models, but we need to be aware that given you've got so many parameters in them, it's very easy to overfit to the data. So that's why all the examples that people have mentioned here, they spend a lot of time making sure that you are picking out a signal and it's not just noise that you're fitting to.
Okay, great. A couple of things here. I mean, I don't know if anyone's looking at this, but you know, how machine learning could help find a buyer for a particular physical commodity market. Well, I guess, I mean, the data is getting easier to get hold of, you know, to sort of look at the opportunities for, you know, and even I see customs data now, although it's far from real time, but you can get information and try to find things, right?
Yeah. Actually, it's I see that as an extension of counterparty due diligence, where the more you know about the people you're dealing with, the more opportunities it creates across the piece. Once you build out that sort of market construct, you know, kind of a know your customer and know your customer's customer and know your supplier type thing. And again, I think that's where pattern analysis really comes into its own.
Yeah. There's one question here about AI, how it can manage ESG factors for commodity trading. Well, I'd like to answer that one if I may, because actually we're working with academics in UK and Australia for our own, the SME companies whose trades we support, using AI machine learning, looking at basically a huge amount of data over environmental and social projects, which are meeting a lot of the United Nations SDG goals, and looking at sort of the values that are added into it and stuff, and managing to actually break down a value for each UN SDG goal. And this is really exciting that hopefully in the near future, we can allow SMEs to sort of say, well, you've got this particular physical commodity trade, answer all these questions, and the system will actually give you a ballpark idea of the value that's actually embedded within your commodity trade, which obviously is very important. You know, a lot of buyers of commodities now are saying that we will commit to buying certain types of commodities if they have meeting certain SDG goals. So it's good if they know what the value is. Yeah, exactly. Yeah. So, right. So, sort of wrapping up a little bit, we don't have too much time left. Actually, it's gone pretty fast. Kim, let's start with you. Sort of any sort of final points that you'd sort of like to be able to squeeze in.
I would say that one very important dynamic to establish within the company is the use, explainability, and connection with people. So having some kind of ambassadors or people that will show, and sometimes you can start with really simple stuff, because all data science and AI is a little bit like magic at first, because you can crack some pretty difficult problems that humans are, you know, really a bit lost to sort out using simple techniques. So you have to, you know, show those results. For example, internal emails, it's amazing because, you know, with language processing, you can do zillions of things and kind of predict when the client will call, which is interesting for merchants, or when the client has not bought that particular commodity for a certain amount of time, giving some alerts. And that just, you get some buying from the people in charge in the company, and that's what you should leverage on. And then some more complex, more expensive, longer projects can successfully be built and accepted, because I think it's about acceptance. There is always a little bit of reluctance, and maybe some trading organization are a little bit more old-fashioned than others, but people may feel a little bit threatened that actually models are doing a pretty good job at predicting price, or pretty good job at predicting where this or that particular vessel is going to go, or what kind of commodity is it going to load. So you need the buy-in. So you need to work and be unthreatening, be as nice as possible, and get people to buy.
Exactly, be nice as possible. Ron, any final comments?
Yeah, just briefly. I think there's a dynamic tension between the biggest brands in the world that we work with, and the sort of disruptive nature, or potentially disruptive nature, or perception of that that they may have when working with startups. But actually, I think that smaller companies can have a flywheel effect on larger businesses, and it's great when you get the opportunity to do that and see the fairly fast results of that, I think. And I think it comes down to, what business are you in? How much of this stuff do you really want to do yourself? Because it takes a few years and a few $1 million to really do it properly. But I think when you get companies and startups working well together, it's a great outcome.
Great. Emily, any final thoughts?
Sure. Yeah, super quick. I think AI is valuable for every industry. It's not useful solely for companies and businesses that are high tech or AI ready per se. There are simple ways to start using it and benefiting from it now, and there are varying degrees of complexity as you consider the different applications. So key thing to focus on is really understanding the problem and the need first, and that will determine what AI techniques to apply. But it provides huge value.
So take good time to plan well. Joseph?
Yeah, iterating what everyone else said, really, make a start. Any experience that you gain, it only stands to your benefit in the long run. And yeah, just do it. At the risk of sounding like a Nike commercial.
Well, thank you very much indeed, panelists. Very, very interesting indeed. I'm sure the attendees have loved it as well. We've ran over time as well, so I'm in so much trouble, but it's just been so great to have you. Very, very interesting stuff. Thank you very much, everyone, for all your inputs, and have a good week. Thank you.
Great stuff. Thank you.
Thanks, Sam.
Thank you.